Hello and welcome to our first podcast. We plan a podcast each quarter to provide an update on the Trust and a broader overview of environmental and resource efficiency markets. But before we start, here's the disclaimer. Impax Asset Management AIFM Limited is authorised and regulated by the Financial Conduct Authority. Past performance is no guarantee of future performance. The value of investments can fall as well as rise, and you may get back less than you have invested. This podcast does not represent investment advice. Retail clients should contact their financial advisor before making any investment decision. So today I'm joined by Jon Forster, co-manager of IEM since inception 15 years ago. So 15 years, Jon. Interested to hear your thoughts on how environmental markets have changed over this time.
Well, actually, much has changed, but also much has stayed the same. When we look at the basic investment case, that's really stayed very consistent over time. The increasing demand for basic resources and the need to use them more efficiently, the need for new infrastructure, all of these issues have been consistent over time, and they're driving a need for change. Those changes are coming in the form of new technology being introduced and also a lot of new policy and regulation entering our markets, all of which drives rapid growth in the companies that we invest in. So that story has always remained the same, and the only thing that's changed over the years is it's become a much more global phenomenon and one that impacts a much broader range of sectors. So, much has stayed the same, but actually quite a lot has changed as well. And the area that's really transformed over this period is our investment universe, so the companies and sectors that we can look at. When we first started investing, we had around 250 companies. There was a high proportion of unprofitable businesses, early stage business models. So it was an immature investment universe. If we roll that forward to today, we have a diverse universe of 1,100 companies, and it's in a much broader range of sectors that we can invest in. So most recently, a kind of material change was the addition of sustainable food and agriculture, where we invest in companies that are increasing the efficiency or reducing the environmental impact of food and agriculture activity. And we found some fantastic investment opportunities in those markets. So we think it will continue to evolve.
Thanks. And turning to more recent developments, could you tell us a little bit about how environmental markets have performed in the first quarter of this year?
Following what's been described as a vintage 2016, we did see a small consolidation in the first quarter, but I think overall I'd describe the performance as solid, no major issues.
And of course, we've all heard an awful lot of negative rhetoric from President Trump about the environment and climate change. What do you think the new administration really means for the markets in which you invest?
I'd summarise it as not as much as people fear, nor as much as some people may hope. So on the fear side of things, there's a lot of fear about what Trump means for US renewables. We feel that those fears are overblown. A lot of growth in those markets is driven by state-level policy and actually just pure economics these days. So we think that's going to continue to drive a healthy market. People talk about jobs, but it's interesting to note that renewables is a bigger job creation area than areas like coal. So we think it will continue to be a healthy market. On the hope side of things, there is a lot of hope out there about what Trump means for infrastructure and tax. And I personally feel that might be a little bit overstated. And I think the market's starting to doubt Trump's ability either to invest in infrastructure or generate tax cuts in the quantum that were being anticipated. So that's on that side of things. There is some concern about the rollback of regulations and what that might do to our markets. For example, Trump has been trying to throw a lifeline out to the coal industry and coal-fired power plants. But I think the point is, no one is going to make a 50-year investment decision based on the policy of a president who may only be in office for 4 years. So we're not seeing a big change in behaviour on those side of things. So that's the situation in the US. Not as much change as some people might expect. If we broaden it out and start thinking more globally, yes, there's been some concern and uncertainty about the US commitment to climate change policy. But actually, interestingly, their reticence has driven a kind of increasing commitment by the other countries. So I think at a global level, the drivers behind climate change policy remain intact. If you put all of that together, I'd say it is mixed, but I don't expect it to be a significant headwind to a global fund investing across a range of sectors.
So just returning to IEM PLC specifically now, it would be helpful if you could perhaps outline the main contributors and detractors to performance so far this year.
I think the major contributor to performance was growth. The fourth quarter earnings season completed and showed that in 2016 the portfolio continued to deliver faster growth compared to global markets. We had a particularly good performance in a range of pollution control markets, whether it's testing and monitoring or emerging markets natural gas businesses. And we also had yet another M&A approach for one of our top 10 holdings, so that made a contribution to performance as well. On the detractor side of things, probably two areas to highlight. First of all, our North American holdings lagged the overall portfolio, but were in line with US markets. So I think valuations are more challenging in North America, and that was reflected in performance. And secondly, as we've said in recent quarters, the weakness in solar markets persists. The overcapacity, pricing pressure, and tough market conditions. We think a lot of that is already reflected in prices, and we're monitoring closely through 2017 to wait for the fundamentals to be bottoming, which we think will create an interesting investment opportunity.
Thank you. I gather you've just published the annual report for IEM, and this contains the impact data for the year. It's the first time it's been seen. It'd be really interesting to hear a little bit more about how you derive these net environmental impact data and also what the numbers actually look like this year.
Sure. Well, I think, first of all, just like to point out that the primary focus of the trust is to deliver the best risk-adjusted returns for our shareholders, but we're pleased to be able to deliver a material net environmental benefit at the same time. In terms of how we do it, it's a pure play fund, so it's relatively simple to isolate the environmental impacts. What we do is we establish a benchmark for each product and then measure the net benefit against that benchmark for each holding in the portfolio. We've been conservative and we've not included the data where we don't feel that it's robust. The data's been assured by Ernst & Young, so I think the process was robust. And in terms of the outcome, the CO2 number has come down a little bit this year, but the water treated and supplied has increased. So that just falls out of the stocks we're owning, but overall the portfolio continues to deliver a significant net environmental benefit, which is of interest to our investors.
And finally, what do you think 2017 might hold? Are you planning any significant changes to the portfolio?
Well, I think equity markets are likely to see ongoing volatility. As we all know, there are a number of elections in Europe, with France next up. We're seeing a lot of geopolitical tension in different regions, particularly Syria and North Korea. And I think that's going to make for a choppy market. When we focus in on what we're in control of and the portfolio, I feel okay about valuation, and I feel very confident in the ability to deliver a healthy level of absolute growth. So I think that's okay. When it comes to the portfolio and changes, we did have a couple of M&A deals complete in the quarter, and we continue to find compelling investment opportunities in emerging markets and also just in specific stocks. At the end of the day, I feel very confident in the outlook for the trust for the next 15 years.
Very good. Thanks, Jon. We'll be back with an update in July, but please do get in touch if you have any comments or questions. You can reach us via our website, www.impaxenvironmentalmarkets.co.uk, by email at clientservices@impaxam.com, or do follow us on Twitter @IEMPLC. Thank you for listening, and we'll be back in July.